Welcome, everyone. I'm Jeff John Roberts. I'm very happy to be doing the venture capital panel. What I like about VC are the people like we have on stage. Their job is to see the future, not just to see it, but to put money on it. So I think it's, the insights you can get are generally very high signal. I think let's just go right into it. I want to ask to open very quickly each of our panelists to say, which sector or two are you most excited about putting your money in? Let's start us off, Michelle.
Sure, I'm happy to. It's always tough starting off these things, but I hope to have like a good discussion with everyone else on what they're thinking. For us, based on what we've seen across the world, and 500 really invests in many different markets. We've deployed capital into 80 different countries in different areas across the globe. The opportunities are very market specific and based on the market dynamics of where you're at. So for example, I'm based in Singapore, and what we see in Southeast Asia takes on a very unique flavor. One of the areas in which we've been investing in quite significantly lately has been agri-tech, which may surprise many people, but a lot of the low-hanging fruit in a market like Southeast Asia and in emerging markets across the world look like spaces like agri-tech, which is bringing up areas, whether it's fisheries, whether it's farmland, whether it is the entire farming supply chain. It may not sound like the craziest and most sophisticated areas where technology can make a difference, but farming practices seem to be so prehistoric in many different markets that you can create multi-billion-dollar opportunities in those spaces.
Farming was not my first guess. I thought you were all going to say AI, but go ahead, Kathy.
So we are Japan's first ESG integrated global VC fund. We started in 2021, so maybe right at the peak, but led by all women. And that's very unusual if you know anything about Japan's financial system. But our excitement, we're investing in a lot of areas, including sustainability, of course, but of the companies we have in our portfolio, nearly half are led by diverse or minority founders, in this case, many women. And we invest both inside Japan and outside Japan. And guess what? We did a study, albeit limited, of IPOs that occurred in 2020 and 2021, male founders versus female founders. Which group would you guess performed better on IPO? The women founders, albeit a much smaller universe, sample size, but on IPO, their average market cap relative to each yen of funds raised until the IPO was in fact 32% higher market cap, and revenues the IPO year was 20% higher than their male-founded peers. Bottom line, we as investors want to see all of the opportunities on the table, not just half. And I think that's what's really missing, not just in Japan, but globally. And I think there's a huge opportunity still to be had in that space.
So bet on the women, but give us the sector quickly.
Sustainability, climate tech, recycling. We just invested in a Boston-based company that is the first sustainable mining company for rare earths and rare minerals called Phoenix Tailings, and super excited about that company. It's deep tech.
Wei, go ahead.
Okay, Weizhou CCV Capital. We are early stage technology-driven fund to chasing startups globally. Actually, we have a Beijing office, Singapore office, and a Silicon Valley office. Now, we've been very exciting. First of all, of course, AI. But we are not only purely focusing on AI, people think, because a lot of people have been fascinated about Sorrow by generative AI. But I think that's just a small piece of the iceberg. The thing behind that is a lot. So we dedicate our resource to combine the AI with like autonomous driving and the robotics. We're trying to make next generation smart machines to help people daily. For example, help retired home senior people to take baths by robotics. It will happen. I think in past years, I thought it will happen in 10 years. But with the current AI development, the brain is ready. The AI now is brain. But the body is like 6 months old. The hardware is not catching up. Mm-hmm. So we will invest in both sides, AI brain and also the hardware, to make sure the real thing can running on the ground within 5 years to help everybody's daily life. That's the first thing we've been dedicated to. The second thing, because we were the Kleiner Perkins China management team for 10 years, if people remember, Kleiner was the first fund dedicated all the resources to green tech investments. Mm. So now we think it's a good time for us to redo that. Green tech is our second focus area?
Okay. So we invest almost exclusively in Southeast Asia. So there's Singapore, Indonesia, Thailand, Vietnam, Malaysia, Philippines. We have I think since we started in 2015, we have a real focus on B2B. So B2B cuts across all sectors, which doesn't really answer your question on sectors, but the state of the economy in Southeast Asia is such that I think B2B has a lot of opportunities. We found success in a lot of B2B companies, basically companies serving other large companies and tapping into marketing budgets, tapping into innovation budgets. We have companies that had grown to a large size just on the back of that. And that's our strategy for the past 8 years in Southeast Asia and will be our strategy going forward, so going after the B2B opportunities. A lot of the attention has been placed on consumer in Southeast Asia, rightfully so, but I think the B2B space has always been overlooked quite a little bit because it's not where the most noticeable names are from, but we found that the quality of revenues from B2B, the level of innovation, the preparedness to pay for B2B solutions are actually quite high in Southeast Asia. So that's something that I definitely want to focus on.
I find this very interesting because I speak a lot to Silicon Valley VCs, and in one sense they're kind of all the same. They say the same thing a lot, and it's just such a dominant ecosystem. But I'm curious, what is distinct about the Hong Kong and China VC scene? How is it different? We're lucky to have a very global collection of VCs up here. So what's different over here than it is in Silicon Valley?
Hong Kong.
Okay, yeah, being with Kleiner for 10 years, compare China and Silicon Valley and the rest of the world, we see. First of all, I think last January, I've been in Silicon Valley, and it's depressing, nothing focused to. But April, I went to there, AI is booming, and everybody got so excited. Now, everybody is about AI. There's a multiple so-called AGI house being organized, and people like party crazily to do hackathon there. So I think that's innovation really booming and happens there. But in China now, I think people more focus on AI on real application level to use AI in different vertical sectors in business, etc. And Hong Kong, I think now Web3 is still the mainstream startup focusing here. People think about how to combine AI and Web3 here, but I know there's many interesting startups moving here because Hong Kong government have a lot of incentive and policy to trying to give startups. So it's started booming. Singapore is another story. Singapore that is the headquarters of the rest of the Southeast Asia. We compare there because we just set up office there. I think there's a lot of capacity, no matter people and technology and also manufacturing capacity spill over from China moving to there to attract a lot of new innovation and startups started there as well.
Anyone else want to weigh in on the China-Hong Kong startup scene?
So I could say something perhaps on a broader geopolitical trend, which is,
So similar.
I think we're going through a sort of like a period where we went through vast globalization and integration, at least of the last 10 years, before the last few years and the change in the macroeconomy. And so what you saw is a sort of like a Cambrian explosion of technology startups all across the world under this guise of what you call cooperation generally, which is companies in the US expand into companies in different parts of the world. You see that in other ecosystems as well. And so the nature of the opportunity is differ from what you have right now in this particular environment, where the political situation is now one of separation. So what you have is opportunities are created in markets for you to build something that may already exist somewhere else, which you may not have had before. I'll give you a good example of this. So the US practice group, for example, for 500, we're seeing a lot that's happening in the AI space in the US, just as we mentioned. But that may not necessarily be true in other parts of the world, where you may focus on other parts of the value chain. In Singapore, people are focusing more on the technology and hard tech layer of AI, semiconductors, photonics, things on chip, because you may want technologically neutral solutions that aren't aligned, for example, with the US or with China. So I think thinking about broader and more in framing the conversation in terms of the broader macroeconomic background will sort of shed some light in the geopolitical background.
That's insightful. Geopolitics seems to have mattered in tech and investing more than ever before, and perhaps it's a strategy. I hadn't thought of that. That's really insightful. Let's just turn to your sector for a second, though. For a while, it wasn't so great being a venture capitalist. 2021, it was a party. Everyone's getting rich, IPOs, exits, but then everyone paid too much. And then there was the hangover, and then interest rates are, 5%. And so I'm going to put my money, not with you guys, but in this safe bank account. So what's it like out there now? Is it getting better? Go ahead, Kathy.
Maybe I'll just speak from Japan because I think it's a very different market versus the rest of the region and, of course, the United States. But many of you know, Japan's venture ecosystem is like, what? They have ventures? They have startups in Japan? Japanese people aren't known to take risks, but actually, the venture market has expanded tenfold in the last decade, albeit from a very, very tiny base. The government's now putting a huge emphasis on venture capital industry, on entrepreneurs. They're shipping thousands of Japanese entrepreneurs to the Silicon Valleys and Tel Avivs of the world. And they have very ambitious targets, for example, to increase this venture investment by tenfold in the next, I think, 4 years, create 100 more unicorns, really, really audacious goals. But the key thing is talent. Is the Japanese average student coming out of school going to take a risk and go into a startup versus work at Mitsubishi Corp or Sumitomo Bank? That's what we're beginning to finally see in Japan. And that's frankly one of the reasons why we started our fund in 21, because we're noticing the talent beginning to flow out of large corporations, foreign and domestic, into this space where that never was seen before. So we're super excited about that. And I think also valuations in Japan never got to the lofty levels that you saw in the US, China, and elsewhere. So of course, valuations were elevated, but they weren't crazy, crazy high levels. So I think it's a real kind of dark horse market, so to speak. There's lots of opportunity. We were talking earlier about sustainability. I was really intrigued about your comments about robotics and AI. I mean, who needs robots to bathe elderly people more than the Japanese, right? Yeah. So there's a lot of solutions now coming onto the market because the societal challenges and headwinds facing the country are so daunting. So we think it's a really, really exciting moment for Japan, despite the global environment for venture.
Yeah, I think this is reflecting. We've heard a couple times, one size doesn't fit all, and the narrative might not even be the same everywhere in the world. But Wei Sheng, tell me about your experience in Southeast Asia. What have you learned since 2021?
I think the flow of capital from 2021 to today has been very different. 21, you will see a lot of high prices, specifically in certain markets. I think in Indonesia, you see a lot of lofty sort of valuations that has come down over time. Indonesia is sort of like the primary market that every foreign investor go after because it's ostensibly the largest market. Young population, all the macros are going for Indonesia, stable government and all that. And I think what that has attracted is a lot of capital, right? And what that capital has piled on is, people call it asset inflation. People think about, rising valuations. But what that really means is that a lot of the money that goes into Indonesia has been going after talent, has been going after hiring people, and, wages have been going up in Indonesia for many, many years, such that the same money that you pay an Indonesian engineer, you can pay much less in other parts of Southeast Asia and still get the same level of talent. I think that has come down significantly, not least because some of the US large growth investors have started moving out. But that's where I think a lot of Asian growth investors has now stepped up and stepped into the game as well to fill some of the gaps. I think asset prices in a lot of Southeast Asian startups will continue to come down, and that makes for a better investing environment for earlier investors like us.
Yeah, we've heard this a couple times, look for the talent. I think you can probably, I've never heard doing that. In the title of the panel sort of said something about you guys are more picky now. So just pretend this is a room full of startup entrepreneurs. What's your advice if they want to get your attention? What should they do or what should they not do? Go ahead, Michelle.
Venture, it depends on what stage you're investing at to begin with. I think one of the lessons over the last few years is just how important price is to actually investing. And many people didn't believe that, I think, for a decade. So valuations and where you're at in terms of your company's trajectory really does matter a lot to VCs, a lot more than it used to. At the early stage, we still focus on the entrepreneur itself. So who you are and how big the market is that you're tackling, I think, are perhaps the most important factors, at least at the earlier stage. In our growth equity practice at the later stage, people are getting a lot more conscious of what value the investors can bring to the company as well. People are rolling up their sleeves and really getting involved in the businesses and working alongside entrepreneurs and not just assuming the company is going to go up and to the right. And also a lot more cognizant of what the journey to an exit is. So it's quite funny. Sometimes we're sitting now and looking at seed stage companies, the investment practice that's early, and we have other investors that are asking early stage entrepreneurs, what's the path to an IPO for a company that is it's what you call 2 men and a dog, right, at that particular point in time. So I think shifts are taking place in what investors are looking for in companies across the spectrum, but people are just scrutinizing companies a lot more.
I would say for Japan, while the market is growing, a lot of the entrepreneurs that we meet, if you look at their pitch deck, they always have this graph showing, their revenues over 10 years, and then the last bar is in red and says IPO. And 85% plus of the exits in Japan are IPO. It is true, it's relatively easy to go public in Japan, so that's one of the reasons. But oftentimes, because of the lack of growth funding at that end of the spectrum, they just run out of money and they're tempted to go public because that's the only way they can raise capital. So for them, the advice we give them is, look, yes, IPO is tempting, but try to scale your business bigger and think global. That's another handicap for a lot of Japanese startups is they think, I'm the biggest fish in little pond Japan. I'm going to go IPO. I've done, I've reached my goal, my dream, and I've rung that bell. But think beyond Japan's borders. And I think in the old days, Sony, Toyota, Honda, many examples of companies that have gone global successfully in Japan. But in more recent years, particularly in the software and internet space, it's been more limited to domestic champions. So encouraging them to think scale, global, and not just IPO, but maybe M&A as an alternative.
I want to go to you, Wei and Wei Sheng, but just the audience, if anyone has a question for these amazing venture capitalists up here, you'll have an opportunity in just a moment. Please put your hand up if you want to have a question, but first, please, you guys, what's your advice for the entrepreneurs out there?
I invest at the Series A stage, which is the stage where they start to find some level of product market fit. And one thing that I try to ask all entrepreneurs in the first meeting, second meeting is, I think a lot of entrepreneurs, they confound value proposition with differentiation. And a lot of entrepreneurs are very excited to tell you why they are different, but not getting deep into why whatever they're building is useful, and thinking deeper about the user experience, who the user should be, what the user experience and decision-making process should be. So I'm partial to entrepreneurs who discern these two things very cleanly. What's the value proposition? And what's the differentiation that you have that enables you to be better than others? So that's just a practical tip to entrepreneurs.
My suggestion will similar to Cassie's final point. I think globally from today, because actually venture capital is a very fragile business model. It doesn't apply to all the market. The past 20, 30 years, excitement about early stage venture capital is because of US and China. Out of these two countries now, if you start up building startup, maybe India now is big enough, but the rest of the world is not big enough. Single market is too small. So from day one, any entrepreneur, if you want to building a technology solution for people, you think a global market, not only your country, because it's not big enough for greedy venture capitalists, okay?
Yeah, I wanted to add one quick thing to what you said and agree with that completely, which is from 2010 to 2020, when it was the go-go years and money was cheap, VCs and investors and the ecosystem at large were throwing money behind everything, right? Regardless of what the valuation is, if it's tech, if it's in a certain space, you assume it's going to go up to the right. As a result of that, I mean, there were definitely downsides, which is a lot of the value wasn't realized playing that game. But the upside is that you had a range of entrepreneurs that were thinking very ambitiously and in a very bold manner. What's happened now is that there's been a change in this environment. And because of that, everyone is becoming conservative. Investors are becoming conservative. Entrepreneurs are taming down their ambitions. And I think that is a dangerous thing. And encouraging entrepreneurs to continually be ambitious despite what is happening in the macroeconomy is very important, because VC is not an asset class of small or mediocre returns. It's really about the moonshots. It's really about the contrarian bets. It's about those companies that get to $1, $10, $100 billion in valuation. So encouraging that despite what is happening in the macroeconomy, I think is the most important advice. I
We've heard that a couple times. Find people who are willing to go, against conventional wisdom,
Yeah.
bet big, even when everyone else is saying be conservative. Do we have any audience questions? Well, I certainly have a couple more. Unfortunately, we're almost out of time. I know VCs like to keep it upbeat and optimistic, but real quickly, let's go down the line. Tell me something that's not working. You've seen things that were really hot in the past, but didn't work out. So start us off, Wei. Something you just will stay away from now.
Oh, there's many money being disposed and lost. There's a misunderstanding of many people that think there's a need, then there's a business. Needs doesn't mean it's definitely a business. You have to test, do people want to pay for that? Different regions have different character. Like in China, there's many business model investing a lot of money. Eventually, when you raise the price you charge, nobody pay for that, so it's gone. So I think for entrepreneur, you have to identify the real pain, and you have to test how much people will pay for that. Then that's a real business.
I think try to stay away from the buzzwords. The buzzword of the day is, I think I heard AI on every single panel so far. It is indeed an opportunity, but I think with every opportunity comes a bit of hubris as well. And we've seen this in cycles. In the past, a lot of Web3 was thrown around, robotics at one point, and I think right now the buzzword is definitely around generative AI and what it can do. I think we have to be very discerning on what a product should be able to do, can do, and what kind of use cases, and invest accordingly.
I know ESG has become kind of a four-letter word in certain parts of this planet, but I think that there were a lot of companies that we came across, not just in Japan, but outside Japan, that had the kind of ESG label, sustainability, whatever, that was their niche. And there was a lot of hype around that, almost like AI is today. But those companies what we're doing is trying to integrate ESG considerations into the startups themselves, not just the businesses that they run. So what does that mean? That means, do they measure their carbon footprint? Do they have diversity in leadership? How robust is their data privacy and security policies? What does their board governance look like? These are, to me, kind of motherhood and apple pie stuff, very obvious, but a lot of startups kind of skip those steps and then expect to go public or expect to be acquired when they haven't actually done all of the work that they should have done when they were still forming. And so I think ESG kind of, ESG light companies in that space, those days are over. And I think real ESG integrated companies, those are going to be the winners.
Yeah, Michelle, you get the last word very quickly.
The graveyard of VC is long and deep. And I think it's a nature of the asset class as a whole. You don't get to your FANGs and your BATs without actually getting a whole ton of other things wrong in the process. I think if I were to reflect on one thing, at least from a global investor lens, that doesn't work out as well as people think it is when you do the X of Y in some market, the Uber of Southeast Asia, the Xmart, the Amazon of Africa, those kind of model direct plays don't actually always work out in the same way. Fundamentally because you may not understand the unit economics fully of the big and successful models in other markets to begin with. It's only when those companies list that you fully have access to the financials and you're like, well, that's not working out very well, is it? But you've invested in 30 different models in different parts of the world doing the exact same thing. So I think a real reflection on that is something that we now stay away from.
Gotcha. Okay, beware the copycats. I wish we had more time, but please give a warm hand to our venture capitalists. Thank you.